Hello traders, Cousin Vinny coming to you from theclosingprint.com on May the 15th, 2016. In this video we'll cover the indices, all of which moved lower, with the S&P 500, NASDAQ, and the comp off less than the Russell 2000, which was off by minus 1.15%, followed by the New York Stock Exchange Composite. Tick and TICQ are both moving higher, though Tick is moving sideways. NYSE and NASI for the New York Stock Exchange and the NASDAQ have bear crossed for the past 3 weeks, are continuing to move lower. Breadth is a caveat for the bulls, where we see the New York Stock Exchange high-low moving lower. The NYHL is still positive, but it's descending. VIX, we reverted back to mean at the 50-period moving average, which we've been following for a few weeks. We closed at 15.04, so we're mid-range and can move in either direction. Currencies, US dollar is higher, the yen is trading at 20 MA support and could bounce, but for the most part it looks like the US dollar will continue its bullish trend, which will be a headwind for companies reporting forward guidance, which lately have been more important than the earnings if you've been paying attention. Guidance is affected by the possibilities that the US dollar could continue to move higher. US companies reporting with international operations do see this as a headwind. Bonds, TLT, AGG are both higher for the week. We have junk flagging on the weekly and HYG with a pullback to the 10 EMA. Commodities, the CRB index, we have a hanging man on the top of a monthly bullish candle, so we could see commodities move in either direction as well. Setups, we'll look at the IBD 50 list and also look at Bukowski, who has a CPI signal which has been bearish since 428, referencing a potential head and shoulders on the Dow Jones Industrial Average. Let's start off with the SPY daily. We have this head and shoulders top that we've been paying attention to for 2 weeks now. When we bounced at this level at 203.84, these lows along in here marked a line in the sand at 203.84. We saw that as a potential right shoulder building, and we saw that happen this week on Tuesday. Wednesday we reversed. Thursday we saw some bullish action push prices back up a little bit higher into the range, and then Friday we followed through to the downside. While we don't have perfect volume patterns for a head and shoulders top, we do have a reverse Kirby here, so we have resistance at this level now at 205. We move down below that level, we could see prices accelerate fairly quickly. I have a green shaded area here and here, a measured move if we break this neckline. We also have Fibonacci levels, a 382 Fibonacci level at around 199 and a 50% retracement at around 195.75. So watch those potential levels for support and resistance. We have Stowe turning back down, and MACD continues to move to the downside. Notice moving away from its signal line, so momentum is accelerating. Potential catalysts obviously are the S&P 500 sectors. You want to keep an eye on those. We covered that in a Friday live broadcast on ticker.tv. You want to check that out. It was the last video that I posted. So I'll cover the sectors in depth there. Shifting gears and looking at the weekly chart, we are lower for 3 weeks straight on the SPY, and we're about to lose the 10-period EMA. Note the shooting star pattern. Nikkei is up above, Stowe is turning over, and MACD momentum is turning more bearish. Just judging by this serpentine motion, we would anticipate further downside momentum. I'm going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I'm going to go spend time with the family outside. Hope you enjoy your weekend, and we'll see you in the room on Monday. Take care.